Hello and welcome to FinextraTV's Unplugged series. I'm Hannah Wallace, and joining me on the call today are two economists from ING. We've got Teunis Brosens and Carlo Cocuzzo on the line. Hello, gentlemen. Thanks for joining us.
Thank you.
We're going to be talking about COVID-19's impact on digital finance, because over the last few weeks we've seen the pandemic have a big impact on the global economy and in turn digital finance. We've also seen a surge in government financial and economic intervention. So, Teunis, that's my first question really. How long can we see this increased public role lasting from the government? And are we looking at a renewed debate on the division of labour between the public and private sectors in finance?
Yeah, it's very early days, of course, to make any predictions about the changing government role. But I do think that indeed we are seeing a profound and lasting change, and that the government will retain a bigger role in finance. Because you saw already before the crisis, for a number of years, before the COVID-19 crisis, a debate about the role of governments in the financial sector. This debate was mostly centered on payments. There was basically a fringe debate going on about central bank digital currencies, about the strategic importance of the payment infrastructure. But as I said, this was a fringe debate, basically, and now it's being propelled front and center. And I think we will see much more debate about this in the months and probably years to come. And well, why is that? Well, you already indicated governments have a hugely increased role in the economy now and also in the financial sector. They are extending guarantees. Regulations are changing for banks and other financial intermediaries. And so this really begs the question, what functions in finance are really functions for the public good? Are really, you could say, utility functions? Is payments a utility function? Is lending a utility function? And these are very fundamental debates. So this will take a lot of years, and economists will have opinions and other people will have opinions. Of course, financial intermediaries will have a major opinion on this because this will affect their business. But it's a very important debate to have, and it ties to the debate on central bank digital currencies. It ties to a lot of debates. It ties to the business model of banks and other financial intermediaries. So I think this will be one of the fundamental debates that we will have in the years ahead.
All right, and Carlo, coming to you then, I think it's fair to say, as we work remotely, we've shown that we can do so quite successfully, and it's also put a greater importance on the need for digital platforms. As these become more important in lockdown societies, what does it mean for cross-border supply lines and our foreign dependencies then?
Yes, this is quite a relevant point, as Teunis was saying. We are now transitioning towards a deglobalization trend. It's quite clear, and COVID-19 has exposed the fragilities underpinning the globalization and the world we've been living in for the last 20 to 30 years. Governments will for sure seek less foreign dependency on global supply chains, and they could raise also national security concerns as well. So, we've seen hoarding of medical equipment and also face masks, for example, quite a heated debate over there. And that's on the globalization aspect. But then there's also, as you said, the working from home aspect. And I think that working from home will increase, of course, demand for network, internet bandwidth. And by extension, that will place a much greater importance on strategic importance of domestic digital infrastructure. And on finance as well, there are strong cross-border weaknesses too there. And this was well before COVID-19. It's not just now. If we look back in history, as Teunis alluded earlier, in 2007, 2008, we all knew that all the fragilities that were underpinning finance and the financial industry throughout the globe. There were huge ramifications of financial shocks throughout the global economy. And one final note on foreign dependency, of course. There is also the debate around big tech role in finance. And this is a point that quite a heated debate around this, of course, also in Europe. National authorities were quite critical of some big tech finance platforms just up to a couple of weeks ago. But of course, there's also the debate around the need to foster innovation in financial services. So it's going to be a tricky balancing act.
And of course, with these changes come different challenges, don't they? Because as a result of the pandemic and people working more remotely, we're seeing an increase in cybersecurity. This was obviously a problem before, but Teunis, coming to you, what's the best course of action for us to meet these threats?
Well, I think the cyber threats themselves may not be really new. It's just that they maybe increase in intensity. We all work from home. That puts a huge strain on corporate networks. You basically see that corporations have been really focused on facilitating this working from home environment. So the focus has been on access, on bandwidth. And of course, so there was less capacity to also look at cybercrime. While at the same time, of course, we all installed video conferencing apps. We all had to work with the tools we had. Some of the tools may not have been in accordance with company policy, but well, sometimes you press ahead anyway because you want to have this important video call. And so, well, as now we are settling in to this working from home environment, and corporates and businesses are settling in as well. There is, of course, renewed attention to, all right, what are the cybersecurity implications of all this? Are networks, corporate networks, and the internet at large more easily compromised nowadays? So yeah, businesses are now turning attention to that. And well, what we see and how can we combat this? Well, what we see, of course, cybercrime doesn't stop at the border. And there is cooperation in Europe at the European level, but definitely not as strong. The cooperation between policymakers is definitely not as strong as, for example, it is in the banking union, coordination of financial regulation, etc. So I expect in the future more steps in terms of international cooperation, both between businesses, but also information exchange between businesses, international information agencies, cybercrime agencies, because the more information that is exchanged, the better everybody can prepare for the latest threats.
And Carlo, coming back to you, what about the retail end? Can we expect the adoption of digital finance technologies to accelerate post-COVID-19?
Yes, we do expect the adoption of digital finance technologies to accelerate in the post-COVID-19 world. I mean, with COVID-19, we've seen many people had no choice but to get used to do business digitally. I mean, some examples of these are video conferencing, also send digital documents securely, crucially also contactless payments. And I'm mentioning contactless payments particularly because, of course, my home country is very famous for cash usage, but also in Europe generally, this is quite a trend. And with COVID, instead, we've seen the benefit of doing contactless payments because it could help to reduce contagion risk. And so we do think that COVID-19 could convince to go contactless, even those who still think that cash is king. We do expect also identity verification via video call to be accepted quite rapidly. And all this together could boost the rise of digital financial intermediaries that do only business digitally, basically. But it might also accelerate the demise of local physical branches.
All right, and coming to the responsibilities of these digital financial intermediaries, I think the pandemic has sparked a debate about inequality in society. We keep hearing it on the news, and we've spoken a bit about it on FinextraTV as well. Do you think that the digital financial intermediaries have a responsibility to respond to help those who are self-employed, the SMEs? What do you think?
Absolutely. I mean, as Teunis mentioned at the start of this interview, I mean, governments are putting huge resources on the table in the form of credits and direct transfers as well. I think there's no doubt really that COVID-19 will raise our societal awareness around inequality and financial inclusion and financial security. And digital financial services in particular may be asked to intensify their efforts on financial inclusion. And some examples here are improve access to financial products for the self-employed, for temporary workers as well, and for small and medium enterprises. I think these are the categories that are most exposed to the fragilities of the current downturn. So in this case, particularly, what's really making all this very challenging is that for these categories, there is limited availability of financial data. But most importantly, it's very high, the cost to process them for financial intermediaries. So very difficult to access to these services. And of course, one way to sort of, to go around here is to complement existing financial data with other non-financial data sources going forward. And of course, also the government's response to the current COVID-19 crisis on potential geo-tracking or geolocational tracking could is a good example of how to complement and to use more soft data as opposed to hard financial balance sheet data.
Mm-hmm. All right, that's really interesting. And then, Teunis, coming to you, and sort of my final question then is looking at our relationship with data and how comfortable we feel about sharing it. Because before the pandemic, I was doing quite a few interviews and talking about people's changing attitudes. Do you think that in a crisis, people's attitudes have changed and actually they feel happier sharing their data than they were before?
Well, I think attitudes may be changing. I think at very least, yes, the debate about data sharing, privacy was already going on before the crisis. But I think in various ways, it was just scratching the surface. People were indeed thinking this about, for 1 minute, and then they just returned to their apps and they continued what they were doing, and they continued clicking away at conditions, accepting conditions and agreements like that. Giving away the data for free, basically. So yes, the debate was there, but it was, you could say, in its infancy. And I think we will see a maturing of the debate right now, because, well, obviously, sharing of location data, of health data, in order to combat COVID-19 is now being debated. As Carlo mentioned, financial data or the assessment of creditworthiness can be helped greatly by non-conventional data sources. For example, platforms can provide data on merchants and on buyers that could be used for credit assessments. And I think that too, credit assessment is in the crisis is very important. So there too, I think we will see an acceleration of the debate. And now the interesting thing is that the European Commission had already declared data center of its strategy for the years ahead. And a consultation is in fact running about Europe's data strategy. And this debate will be, well, changed and will probably change direction, will be shaped by COVID-19 in ways that, to be honest, we are not sure yet. Because I think both the advantages of data sharing will become more apparent, but also the importance and the value of protection. Protection against data exploitation will be more evident, because now people are indeed debating, should I really share my location data for pandemic purposes? Should I share my health data with the government? So it's becoming more concrete, and therefore I think the debate will become sharper, but more valuable and with more tangible results. So in that sense, I'm happy that this debate is moving forward, and well, we'll see in what direction it'll go. But I think in the end, the only way forward is in the financial sector, more data sharing within the financial sector, but definitely also with adjacent sectors, back and forth to enhance the customer experience, to enhance credit assessment, and to in general provide better services in more efficient ways.
Mm-hmm. Well, it's interesting, isn't it? Because the banks and the large organizations did have measures in place, well, most of them did, to deal and cope with a pandemic, just maybe not one at this scale. They weren't expecting this, and it has been a huge shock to the system. And as you've said, will have a lasting impact on digital finance. So just to conclude then, Teunis and Carlo, could you highlight going forward, what will be the biggest impacts then, if you could list them?
let me start. I think the biggest impact will be indeed the reassessment of the role of the government. And because this is something that's a very fundamental debate that will affect everything, basically, every other discussion that we will be having. I think the second one for me would be indeed the role of data and data sharing within finance and beyond. Carlo, perhaps?
Yes, absolutely. Totally agree. I think the role of the government in the economy will again come to the spotlight, and especially now more so than in the past, because I mean, let's be very clear. I mean, the scale of the current downturn is much bigger than what we've seen in the recent past, and so the challenges are huge. And I'm pretty sure that once the dust is settled, the debate between the private-public sector involvement in finance will heat up again, as it did in the global financial crisis of 2007, 2008. The other point for sure is data sharing. I think a lot of things will change, especially regarding consumers' attitudes towards data sharing. I mean, as Teunis said, credit checks, for example, is a perfect example. I mean, there are lots of businesses, especially in some of the European countries like Italy or Spain, a lot of small and medium enterprises that they really need quick credit checks. But this is also for households, and they are facing acute liquidity needs due to these lockdown measures. And doing quick credit checks can really mean a lot to them. And there is also a report that was a research report that was shared by the BIS on this, where they show that credit models actually using learning and machine learning and data from e-commerce platforms are actually sometimes better at predicting losses than traditional credit bureau ratings. So I think complement alternative platform data with existing financial balance sheet data is going to be important going forward.
And I think it's safe to say we'll be talking about this for many years down the line. Like you say, it's 2020 and we're still talking about 2008 and the crash then. So this will be a big one going forward. Gentlemen, thank you very much. We'll leave it there. Otherwise, we could go on forever. And it's been a pleasure. Thank you.
Thank you very much.